Welcome back. How are you all? I'm fine. And please, before going further, let me know that you can hear me, or if there is any problem about about the sound, please let me know that. Okay. Then talk about the price action, not price action actually, about the weekly analysis. But before that, please let me know sound is clear. You can hear me. Everything's perfect. Just write it down. I need to know that first. Can you hear me from the employment? Sound is good. Thank you, AAFX. Okay, thank you guys. So you can hear me. Uh, hey Rain. How are you, brother? I'm fine. Thanks for asking, brother. Ahmed Mustafa. Hello, brother. Mm, like them. Thanks, brother, for giving me the like. Akhiruজ্জামান Khan. Walaikum Salam. Saying, how are you, brother? How's everything? Thank you, Rain, for confirming that everything is okay. Thank you, guys. It's been long. I mean, near about 1 week. Perfect. Hey, Martin. Welcome back, brother. How are you? Welcome back, brother. It's been 1 week. I wasn't able to trade, so I'm little nervous now because I'm not used. I'm not feeling cool with the weekly analysis. So don't take this week analysis seriously, as I took a little break. So sometimes after a break, everything feels like brand new. So this is the calendar for next week. I mean the running week. Tuesday we have the news at 8. I mean sorry 10 PMI. Then we have the Fed Chair Powell. I hate this Fed Chair Powell because I never know how to trade this Fed Chair Powell. I really hate him. I'm just kidding. Thursday we have some red folder news, and Friday we have 4 days red folder news. So except Monday, we will expect the volatility the rest 4 days. So this week is going to be highly volatile. I believe so. And if you have the news in front of you, please don't try to trade. Wait until the news published. After the news, try to wait some more times, near about 15 minutes, at least 15 minutes. Then go for the news. Go for the trade. You look at the medium impact news at 11:30. I don't give that much priority to that news. That means the medium folder news or the orange folder news. This news actually, you can trade that news. Okay, you can trade. It's not that much important, but red folder news, never try to trade them. It's highly risky. That's my opinion. So I do sometimes, but it's purely gambling. I don't like it. Okay, everything is perfect. Thank you, Akhtaruজ্জামান, for confirming that everything is cool, man. Thank you. So this is the calendar for next week. We have the morning news only, no PM news. So rest, until 10 a.m. no entries. Okay. So Friday 8:30 a.m. but rest of the days we have the news at 10 a.m. Today's live is not going to be so long. I think maximum 1 hour, and then we will try to finish this. Okay. This is dollar index, and this is the monthly chart. Why monthly chart? Because every month at the first weekend you have to start with the monthly chart. Sometimes I start with 3 month, but most of the time I start with monthly chart. So it's enough to see the chart from monthly. You can see this is the inversion fair value gap from monthly chart. Okay, let me explain some other things. This is the monthly fair value gap. This is the monthly fair value gap as well. Okay, so market came to this monthly fair value gap, market went to that monthly fair value gap. Okay, so this is kind of range bound. Look at this. Just think this is the, let me actually make it bigger. And look, this is range bound. Just think this is 1 minute chart. If this was the 1 minute chart, don't you think this is the pure consolidation? I believe so. Okay, market is in range bound between this monthly fair value gap and this monthly fair value gap. Market came here, went lower, This is the inversion fair value gap. Price came here to that inversion fair value gap. This month has started with this red candle. Okay. Now, if you understand the PO3, something like this, market open here, then it went little lower, then it went higher. Maybe it will close here or here. I don't care about the closing. But if you think like that way, the PO3 to the monthly candle, then this can be the manipulation. Okay, that means market went lower. This could be the consolidation. I mean, sorry, the manipulation. That means later market will expand higher, then maybe it will go above. Now, at the same time, this inversion fair value gap is very strong because so far we are getting the reaction from the monthly inversion fair value gap. If you don't want to mark the inversion fair value gap, then you can go to that monthly fair value gap. This candle high, that candle low. That is your fair value gap as well. If you remember last week, not last week, the before the last week, I told that I would love to go with the inversion fair value gap, but yeah, obviously there is your normal fair value gap as well. So it's up to you which one is you prefer. It's up to you. I love to go with inversion one. So price came here. I'm thinking this is the reaction. Now, how far this reaction can happen? This is not order block. Okay, this candle is not order block. I'm thinking, yeah, market can come little lower until that high. This candle high. Okay, I don't know. Yeah, did it tap over there? No, it didn't reach over there, but it can tap to that candle high. After that, market can go higher. Right now, I'm thinking market is going higher. I'm not expecting lower market expansion, but obviously it is it can go I mean it can go lower. It can go lower. Okay, obviously it can go lower. What is your question? Hope everything went perfect with the wedding. Everything is cool, Usnadik. Alhamdulillah, everything was cool, man. Everything is perfect, man. Thanks for asking, brother. How did the wedding ceremony go? Hope you enjoyed the celebrating. Congratulations to your sister. Thank you, Sujit. But you know, this is my sister's wedding, and she just left us. Okay, so not a good feelings. But yeah, everything was cool, man. I mean, she's my sister though, but she has her own life. Okay, something like that. Now it's an empty place. You can see the farewell gap, which can't be filled. Never. It can never be balanced. Never. BPR, balanced price range. No. This is not balanced price range. If this fair value gap is balanced, when market will go lower, it will take that low. See this low. When market will go lower, it will take that low. In that type of situation, this fair value gap will be balanced. Until then, in my opinion, this is not balanced. Now, when ICT explained the balanced price range, he told that this is balanced price range. So he actually expect a sell over there depending on his balanced price range. But I don't trade depending on the balanced price range. Instead of that, I wait to see that this fair value gap is balanced, and for that I need to see that candle will go lower and it will take that sell side liquidity. Now, if it takes that sell side also, that is cool, but at least it has to take that low. Then this will be fully balanced. Okay, so ICT ICT himself, what to say? I mean, he expect this is going to be balanced, and I believe that I will wait until it is balanced. Okay, so this is two different things. According to ICT, this is balanced price range, so this should be this can I mean this candle or the series of candles should go lower and it should take that low. He will expect like that way. Now, I don't expect that way. I wait. If it happens, then I will say this is balanced price range. Now you can ask why, then what is the point of that? For that you have to watch the balanced price range video. You will understand. Okay. but this is not balanced yet, in my opinion, brother. Can we say it is BPI? Yeah, Lini, I think I gave you the answer. It's little confusing, but if you watch the video from my YouTube channel, Balanced Price Runs, you will find that from the study section. You will understand what does it mean, okay? Hey George, how are you, brother? We missed you, man. I missed you all, okay? I missed you all, but yeah, to be honest, I was so busy. I wasn't even able to sit in front of my chart for last 3 days. When you come for live trading, MS, whenever I come for live trading, I tweet that beforehand. Okay, if you are with me in my Twitter, you should have known that when I actually come for the live trading. But yeah, tomorrow I will come at 9 a.m. New York local time. Maybe I will stay only the morning session. Okay, so some more responsibilities are now. I have to do something. That's why maybe just the morning session tomorrow from 9 a.m. New York local time. Okay, what I was talking about. I would love to see market will tap to that candle high, okay, over here. It will reach until that high. Now, as I explained, market open here, it went, I mean, this little, accumulation, then it went lower. This is manipulation. Then it will expand higher. This is expansion, reset the price. Something like this, I'm expecting. Okay, so market open here, went lower. That is why I'm expecting maybe market will go higher. Now, at the same time, as I told you, this is the inversion fair value gap. So market came here to the inversion fair value gap. The week came to the consequent encroachment to the monthly inversion fair value gap. Then it went lower. Okay, so from monthly chart, I am seeing this just a consolidation in a monthly basis. So this is just a monthly consolidation. Let's go to weekly chart. Let's see if we can have something or not. So you can see this is the fair value gap. This is the breakaway gap, as I explained, that market will leave this gap open like that way. So far it is unfilled, and that can't be the target. Okay, that can't be the target. It's nearly impossible to mark this gap as your target. So above this parallel gap, I have only this parallel gap. So this blue two line. Okay, so look at this two line. This candle high, that candle low. I have only this parallel gap. You can see last week and the before last week, these 2 week market came here to that parallel gap, and this parallel gap is holding the price. Okay, so this is holding the price. This is the consequent encroachment of that week. Why this week? Because this week has cleared all of this liquidity, and this week perfectly traded that parallel gap. So this week 50% is highly important to me. Okay, to me this is highly important. So I marked that on. If market can close above that constant encroachment, then I will start to think it is going toward that buy side liquidity. Okay, this is the buy side liquidity, so it's going toward that buy side liquidity until it breaks that constant encroachment. I'm not expecting a higher run. It can reach until that constant encroachment, then it can fall again. At the same time, this is the volume balance. You look at this run, boom, from here to here. This is the run, okay, the big run. In that run, this is the volume balance. Now, why this volume balance? I can see market came here to that volume balance. Okay, I just randomly mark that volume balance, and then I find out that I don't have any other volume balance near that volume balance, so clean. I have another volume balance over here. I just look over here, but at the same place I have this weekly fair value gap. Okay, so I have this weekly fair value gap. I didn't mark that volume balance. Instead of that, I just marked the weekly fair value gap. Price came to this weekly fair value gap, went above. Came to this weekly fair value gap. What is this? Last fair value gap. What is this? Last fair value gap. Okay, this is the last fair value gap. I mean, why last fair value gap? When market come from higher to lower, this is the first fair value gap. When market came to the low, it started to go high. Now, when it started to go high, the first fair value gap turns into the last fair value gap. See from here, This is the first fair value gap, then this is the last fair value gap. So where did it go? To the last fair value gap. Now, why this is the last fair value gap? When market went low to high, this all the first fair value gap. It went higher, it started to fall, 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 fall. Now, this first fair value gap turns into the last fair value gap, right? From here, see, one fair value gap, two fair value gap, maybe three fair value gap, then the last fair value gap. Market is falling, falling, falling. Where did it go? To the last fair value gap. Market came to the last fair value gap, market went to the last fair value gap. It is inside these two range. It has to break one of this area, either this fair value gap or that fair value gap. I want to say it will break the upper fair value gap, this fair value gap. It will break that fair value gap. It will come toward that buy side liquid. That is my expectation. And for that, my initial target is that constant encroachment. That is my initial target. Now, last week, as I explained, I will tell that again when I will be in daily chart. I will explain that what I told last week and how it worked. Okay. This week, when if market can reach to that constant encroachment, it is a higher run. So all other markets will fall. If you can have a trade, maybe one or two trade for the week, it's done. Every day is not for trading. We all know that, but we don't take that. We are not agree with that. We need every day. We need everyday trading. All of us, we know that every day is not for trading. We will take 1 or 2 days for trade, and rest of the days we have to read the price action. But we don't agree with that. We need trade every single day. Now, I told that okay, no problem, go for one trade, but no, we need every session entry. Okay, no problem. London session, morning session, PM session, no problem. No man, I can't stop by one trade. I have to take minimum 5 trades, 10 trades in one session. This is the place where we are wrong. Okay, so first of all, you have to understand that every day is not for trading. Maybe in Monday you take a better entry, you find out a better edge, it works perfectly, you are done. You are done for the week. Okay, don't go for any other entries. This is the system of trading. This is the system. Okay, now you can earn huge money by one day trading. It is also possible, but that is different thing. I don't want to go over there. Every day is not for trading. This weekly analysis, when market, if market can reach to that constant encroachment, you are done for the week. Okay, you are done for the week. But because you are a scalper, right? No, if you are a scalper, scalping is too difficult. To be honest, brother, scalping is too difficult. The reason is we are not a scalper actually. We are the price action reader. Okay, so a scalper means you will take lose, you will take win. Every single time we will keep taking entry, keep taking entry, keep taking entry. But this is too hard, man. This is too hard for the beginner. When you are learning at the beginning stage, you have to strict with your limitation. That means you have to take either one entry or maybe 10 entry, but you have to stick with that. I take two entry every day, no problem. I will stick with that two entry. If both of them are losing entry, we are done. No more entries. But if you think, okay, I'm a scalper, man, you need more time. So you need more experience to being for being a scalper. I'm not a scalper. I don't know anything about the scalping. The guys who actually has, I mean, lot of experience, they can do a scalp. Like within 6 months, within 1 year, 2 year, 3 years, scalping. No, 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 no. It's not good. Okay, it's not good. It's the, I mean, it's the beginning of blowing account. Okay, we are not a scalper. We will try to find the better is only strategy. We take entry maybe 22 YT model. Market has make liquidity. It has taken the liquidity. Market structure shift. Parallel cap entry. Target done. We are done for the week because we are at our beginning. So yeah, whatever. So I can see that market came here to that volume balance. Now I don't know, is there anything any relation with that volume balance or not? but I find out that it tapped that volume balance perfectly, then it went higher. So I'm not telling that it's important. I'm not telling that you can mark this volume balance, look this volume balance. No, I'm not telling anything about that. I just mark that, and I want to see later if it give me any other reaction or not. I'm curious about this weekly fair value gap. If body can close below that weekly fair value gap, then I will start to think maybe market is now going lower toward that fair value gap. Until the body didn't close, I mean, if the body doesn't close below that weekly fair value gap, still I'm thinking market will expand higher. And when it will expand higher, this consequent encroachment of that week is important for me. So for me, right now, I'm thinking market will expand higher toward that constant encroachment. After that, maybe market will go above that high. Maybe market will come and take that relatively equal highs, or maybe that buy side liquidity. I don't care about that. For me, right now, I'm thinking market will reach until that constant encroachment. If market close or market go to that weekly fair value gap, then I will start to think market will go toward that maybe around that area, okay, toward that I mean fair value gap from the weekly chart. Though I don't really want to see that. I really don't want to see that. It can come until that previous inversion fair value gap. It can come until that fair value gap as well. Then it can expand higher. But I really don't want to see that. This is my expectation. And as I told, okay, after 1 week, I'm not feeling so confident about this weekly analysis. I'm just trying to explain all the possibilities. Okay, but if I see this parallel gap is broken strongly, সব দিয়ে দিছে আম্মা আচ্ছা দরজাটা চাপে দিল if I see a very strong run through that weekly fair value gap, I will start to think market will reach until that volume balance. I mean, sorry, not volume balance, inversion fair value gap. This candle, look at this candle low, that candle high, or this fair value gap. But to be honest, gun to my head, I don't want to see that. I want to see market will expand higher. That's all I want to see. Let's go to daily chart. I have already checked the calendar, brother. Ahmed Mustafa. I have already checked that. I mean, 4 days we have the red folder news. Monday, I mean Tuesday, Wednesday, Thursday, Friday. Or these 4 days we have the red folder news, and we have PMI in Tuesday. Wednesday we have Fed Chair Powell. Thursday we have FOMC something. I really hate the Fed Chair Powell. I don't know how to trade that guy, but I don't have any idea. So now I have to remove this from here, otherwise I will be confused. Okay, and this one just I'll keep it over there. This is the volume balance. These two line are the volume balance. If you remember, last week I told that market can reach until that order block. Okay, this is the order block. I told clearly. If you are confused, you can watch my last weekly analysis. I told that market can reach until that order block. I will see this daily fair value gap. If I see the daily fair value gap is holding the price, then market will go higher. The market came here. When it came to this order block, it has cleared all of this liquidity and traded that fair value gap perfectly. This week consequent encroachment, I told that market can be range bound between this daily consequent encroachment and this weekly consequent encroachment. Okay, this upper consequent encroachment is from weekly chart. This consequent encroachment is from daily chart. So you can see market actually came here to that constant encroachment. It expand higher. Where did it go? To that weekly fair value gap. It came to that weekly fair value gap. It went lower. Come back again to the constant encroachment. Went higher. So every time market came here to that constant encroachment. Finally, Friday market expand lower and closed at the constant encroachment of the daily fair value gap. I'm totally cool with that because the body didn't close below the constant encroachment. That means this daily fair value gap is holding the price perfectly. It is holding the price. Now you can say, brother, market closed here below that fair value gap. Why you are not thinking about the breakout? I'm thinking this as a fake breakout. Okay, I'm really studying with the fake breakout. I'm trying to find out when I can understand beforehand that this is the fake breakout. Still, I don't know how to fix that problem. Okay, sometimes it is fake breakout, most of the time it is the breakout. But to be honest, as my expectation market will go higher, I'm seeing these two candle as a fake breakout. So market has traded the lower constant encroachment of that daily week. Now market should expand higher and trade that constant encroachment from weekly week. Okay, so this is the weekly constant encroachment. It should expand toward that weekly constant encroachment. I want to see that. At the same time, it can come back again one more time to that constant encroachment, but body has to close inside this daily fair value gap. If the body closed below that daily fair value gap, I will start to think market is going lower. Where should it go? I will mark the consequent mean threshold of that order block. Week high to week low. I will I will find out the 50% of that candle that will be the mean threshold. If the daily candle close below that mean threshold, then I will expect market will go toward that lows, this low and that low, that is the shallow run. So market is going toward that shallow run. If market can take that on and expand through that fair value gap, why this fair value gap? This was the I mean so this not fair value gap, the volume balance actually. So if the volume balance it went through that volume balance, finally this weekly fair value gap. Okay, so this is for long term. Right now I'm thinking this daily fair value gap will hold the price and I will get the expansion, huge expansion toward that buy side liquidity. But first it will reach to that constant encroachment of that weekly week. Okay, this constant encroachment is from weekly week. I'm sorry for my pronunciation. If it is really hard, I have no idea how to make it more easier to understand. Okay, so this is the daily chart. Let's go to 1 hour chart. So this is the 1 hour chart. Remember this parallel gap I talked about the last week? I told that if market can go through this hourly parallel gap, then only then this buy side liquidity is obvious. If market can go through that, here see another hourly parallel gap over here. That is the last parallel gap from the hourly chart as well. If market can go through that hourly parallel gap, then it will come and take that high. See this high. After that, we have another last parallel gap from hourly chart. If market can go through that, then it will go and take that buy side liquidity. Now, what happened? Market came here to that hourly parallel gap. Look at the respect. How it respected the last parallel gap. Is that the last parallel gap from the hourly chart? Below that buy side liquidity, this is the last parallel gap from hourly chart. Anybody has any confusion? I don't think so. So when market came here to that hourly fair value gap, this hourly fair value gap hold the price perfectly. Finally, last day it went higher. It take that buy side liquidity. It went lower. This is the market structure shift. Over here, I have another hourly fair value gap. This hourly fair value gap is now important for me from hourly chart. If market can go through that hourly fair value gap, see this hourly fair value gap, something like this. If market can go through that hourly fair value gap, then it will make this and this. It will act as an inversion fair value gap, IFVZ. This hourly fair value gap will work as an inversion fair value gap. I want to see that. That is my first expectation. Okay. Now, at the same time, why it will do that? Market came here to that hourly fair value gap. It went lower. It has cleared some liquidity. No, it didn't take the long term and this low. It didn't take that on. I'm cool with that. I'm cool with that. But it has traded, sorry, it has taken some liquidity around that area. This is the expansion. Look, boom, something like that. Is there any market structure shift? I have this market structure shift. Is there any fair value gap? This is my fair value gap. Now it is inside the daily fair value gap, so I didn't mark it, but you can mark that as if you want. This is the hourly fair value gap. Market came to that hourly fair value gap, last hourly fair value gap. Now it should expand higher and it should go through that hourly fair value gap. If it happens, I'm really confident to take buy entry for dollar index. Now, if market just go to that fair value gap and it expand lower, then I will start to think market is going to take those lows. This is the relatively equal lows. This low and that low. They're the relatively equal lows. So market is actually going to take that relatively equal lows. Maybe then it will expand little higher again. Then it will go lower. Something like this. This fair value gap and that fair value gap will determine my bias for this week. I am not sure you guys are getting, I mean, you are getting confused or not. So many things, right? But it will take time. You need more time to understand. Ah, I think I'm trying my level best. I'm repeating the same sentence again and again so that you can get it. But still you are confused, then let me know. I don't have any idea how can I make it more clear. I'm not going to keep it to my chart as this hourly last fair value gap is inside the daily fair value gap. For me, this daily fair value gap is more stronger. That's why I'm not marking this hourly last fair value gap. Okay. Here is another hourly last fair value gap. This is the leg. Look at this leg. So this is the leg. To that leg, I have this hourly fair value gap. This is the low. Here is the high. Okay. So this is also the our last fair value gap from hourly chart. Market came to the last fair value gap, went higher, come back again to the last fair value gap. It should go higher. It should go through this fair value gap. If this fair value gap holds the price, this relatively equal loss should be triggered. Okay, so here the sell liquidity, see this low and that low, they are relatively equal lows. Below those lows I have this low that is very near. Okay, so I'm not going to mark that low and that low. Instead of that, I'm just marking that single low. But you have to remember, this is all relatively equal lows, not a single low. So if market this parallel gap holds the price, then this sell side liquidity will be the target. You have to wait. Okay, here you have nothing to do. Brother, what happens if market start to fall? You have nothing to do. If market start to fall without trade that hourly fair value gap, it is falling, and taking that sell side liquidity. You have nothing to do. You have to just you have to wait. You have to wait for another maybe last fair value gap or another thing. Okay, but you can't place your trade from a random place. You have to be strict with that. Okay, now another thing can happen. Look at this last parallel. Okay, market came here. This is the first time. How beautifully it respect. Next time, beautifully respect. Now market can fall until that last parallel gap, and then you started to see market is going higher. Then you can frame a trade from this parallel gap to that parallel gap. You can frame a trade over there. I'm not agree with that, but it can happen. But you can frame a trade around that area. But from here, if you see market is just falling, it went through this fair value gap, it is going to take that sell side liquidity. You can't do anything. This is logic. This is why trading is boring, because you have to wait first, then you have to frame your trade. That is why this is so boring, so boring. And whoever has the patience, they are the winner over here. Who doesn't have, who are thinking, okay, market didn't reach over there, my analysis is wrong, everything is wrong, I have to take the entry. They're chasing the price. They're not trading, they're just chasing the price. Okay, I'm trying to make everything clear. I'm trying my level best. I don't know, I'm just trying. Okay, explanation is clear. Thank you, AAFX. Thank you, brother. Leonardo, hello, to miss you on last days. I have one question to you. Do you study quarter theory? I started to study quarter theory, and then I find out that quarter theory doesn't work perfectly for me. Okay, it doesn't work perfectly. Sometimes it works, sometimes, I mean, most of the times it doesn't work for me. Not for everyone. I'm not telling anybody to anything. For me, it doesn't work. So I stopped studying quarter theory. But at the beginning it was very nice to me. I mean, it seems too nice to me, and I thought, okay, maybe I found another gem. But later I discovered that it doesn't work for me. But most there are so many people that are working with the quarter theory, I guess if you can understand the word quarter theory and if it works with you, it's cool, man. It's cool. It's really cool. But for me, it doesn't work. So this is the hourly chart explanation. This parallel gap is important for me as I explained. This is the sell side liquidity. This is the buy side liquidity. I have both of them. This is the daily fair value gap. All I want to see, market will expand higher. That's all I want to see. Now, something can happen tomorrow. Market can open here, okay, above, not below, just above. This will be the new week opening gap. Market will tap to the new week opening gap, maybe to the constant encroachment of the new week opening gap. Then it will expand higher. It will come here somewhere, some random level. It will come back again this hourly fair value gap. Maybe it will consolidate here sometimes, something like this. Then it will take that liquidity. Then boom, it can happen. And if it happens, I'm really happy to see that. Okay, that means I want to see Sunday open will be here above the market. Sunday open will be here. I'm not telling it's going to happen, but if it happens, I'll feel good. Okay, I will tell you, brother, see how perfect I am, something like that. That is my expectation. That is my you can say that I want to see that Sunday open will be above here somewhere, not below. If it open below, then this sell side liquidity is more obvious, okay, but I really don't want to see that market will take that sell side liquidity as market is just consolidating around that area for so long now, for so long. Now this is the 15-minute chart, and you can see market actually came here to that entry fair value gap from the 15-minute chart. Market has taken this relatively equal lows, this low and that low. They are relatively equal lows. Market has taken that relatively equal lows, failed to take that low. Instead of that, give me the expansion. Very nice displacement. This is the market structure shift. This is the entry fair value gap. This is the breakaway gap. So market came to the entry fair value gap. It should expand higher now. And when it will go higher, this buy side liquidity around that area, we have the last fair value gap. So as I explained, it can consolidate little bit, okay, above this last fair value gap from hourly chart and the recent hourly fair value gap. It can consolidate around that area for a little time. Then it will expand higher toward that buy side liquidity. That is my expectation. I want to see that. I really want to see that. It should happen. But if market go lower and break that fair value gap from the hourly chart, if it breaks that fair value gap, then this sell side liquidity is my target. This low will be my next target. For breaking, I mean, after taking this sell side liquidity, there is something else market should have to do. We will talk. If I am over here, then I will explain that. But yeah, this hourly fair value gap should be broken. Now you can say, brother, every time you talk about 15-minute fair value gap, why here is hourly fair value gap? Because this is the dollar index, and for dollar index, I love to uh, read the price from the hourly chart, not the lower time frame. Okay, I don't like to go below 15-minute chart. I don't like to go it, but I really love to spend most of my time in hourly fair value gap for dollar index. Now over here, this is the last fair value gap from 15-minute chart. If I just mark two line from here, just random, this is one line and that is another line. So this is the last fair value gap from 15-minute chart. Price came here, went higher. Right now price is over here. If market go through that last fair value gap, then maybe it will reach to that uh, daily order block mean threshold. If the body close below the mean threshold of the daily order block, then it will expand more lower. So I'm gonna remove these two line, but if you want to keep them, you can keep them. So far I'm expecting higher run for dollar index, but at the same time, if market can break that hourly fair value gap, I'll be bearish for dollar index. Now I'm going to Nasdaq. Okay, and to be honest, I just saw this thing happen and market came here. uh I mean, maybe half an hour ago, just half an hour ago I saw it happen. Okay, so this is the monthly chart for Nasdaq, and as you see, there is nothing to explain. Market is at the all-time high. No analysis is appropriate for this type of situation. No monthly analysis, no weekly analysis, nothing is appropriate for this type of situation because market is in a place where we have nothing, no price action, nothing at all, no, nothing. I will do this, but to be honest, brother, I'm not saying that it's going to happen or it has any relation with the price action. Anything. I'm not telling anything. I'm just doing it, okay, for my mental satisfaction. Nothing else. Okay. I think I need to change the time frame. Okay. So you can see this leg has traded that parabolic, okay, high, low, higher, high. So this is the middle leg. I went to the lowest body here to the highest body to that swing or retracement swing. Okay, I went over there. For me, minus 1.5 is, I mean, it is very strong. Okay, it is very, very strong. I don't know how many, I mean, I can't explain, I can't tell you how many times I have seen the reaction from minus 1.5 standard deviation. After minus 1.5, I love to see minus 2.5. Now, minus 2, yeah, it is also strong, very strong. I have no objection with that. But for me, minus 1.5 is the most priority. It is the most priority. Okay, I'm not telling it is going to happen. If I tell that, I'm just going against ICT, as ICT told. If we are at the all-time high, no analysis is actually appropriate for this type of situation. Okay, so please don't get me wrong or don't think that I'm making something new. Okay, I'm just doing this for my own satisfaction. You can see this is the minus 1.1.5 standard deviation. I'm gonna mark that standard deviation just as a buy side liquid. Okay, I'm just going to keep it like that way, and I'm gonna remove the fib over there. Now, if market would love to expand higher, this minus 1.5 standard deviation can be triggered. Okay, can be. I mean, I hope you will understand, brother. You guys are with me for so long. Okay, so I hope that you won't misunderstand me. I'm not telling that this is going to happen, but sometimes we feel something, right? So this is my feelings. I just let me know that you guys are don't misunderstanding me, please. I'm not making anything new. I'm just using my standard deviation, and for me minus 1.5 is really so cool for me. That's why I just put that to my chart. Okay, that's my buy side liquidity. So this is the weekly chart. I told that market can reach until that weekly order block. This is the order block level. So market can reach until that order block. Last week I was expecting market will reach until that order block, but for that we need a condition to fill. Okay, when I'll be in daily chart, I will explain that condition. If that condition is filled, then this order block will be triggered. Otherwise, it's not going to be triggered. Market is going to make another all-time high. So market didn't fill that requirement, it went higher. Now from the weekly chart, what do you see? This is the order block. Obviously no, this black candle, it is kind of order block. That means market can reach until that order block high or open, then it can expand higher. Obviously it can happens, but I don't mark this as my order block. Most of the time it has no job to do. Okay, but yeah, obviously every down close candle to a up run, every single down close candle is act as a order block. Every down close candle. Okay, market went higher, went lower, it went higher, come back again to this down close candle, went higher, to that down close candle, come to that down close candle, went higher. So all of these down close candles act as a order block. But if you ask me about the perfect order block, this is the perfect order block according to me. Over here from the weekly chart, I have nothing to tell, nothing at all. And I really would love to see, did it trade the consequent? No, it didn't trade the consequent cosment as well. And this candle's consequent cosment is also not very important. Yeah, market is over here. I'm thinking that market is going higher. toward that buy side liquidity. At the same time, you see whenever market went higher little bit, it retraced little. Okay, so that means market can retrace little, then it can expand higher. I just can't tell you market is going to fall now. It has reached to its last limit. No, I'm not going to tell that. Nobody knows how far it will go. Nobody knows. So when market is at the all-time high, you have to keep buying until it proves you wrong. That's what ICT told to his last live trading or YouTube streaming, live streaming. He told that until it proves you wrong, you have to keep taking long. You have to keep thinking that market is going higher, going higher, going higher. So here is the daily chart, and last week I told that this daily fair value gap is very important. If you see market has broken this daily fair value gap, then only then you will start to think market will come to that last fair value gap from the daily chart or daily fair value gap or the weekly order block. Market will reach over here if you see body close below that daily fair value gap. Now you can see market came to the constant encroachment of that daily fair value gap and then it expand higher. So there is nothing you can think that market is going to fall. When market came here, the constant encroachment, it closed above that daily fair value gap again. You have to start to think that okay, market is going to make another all-time high. So it happened over there. Market came to that volume balance or the order block. This is the perfect order block. After trading that order block, this is the unfilled area. Okay, so this fair value gap should be unfilled. It left that unfilled over here. Now it is going higher. It can in Monday it can make a fair value gap around that area. Tuesday it will trade that fair value gap or it can expand little lower. Okay, little lower. What is this fair value gap? This fair value gap is called measuring gap. This specific, if it can make a fair value gap around that area, this is called the measuring gap. It can trade that measuring gap, and most of the time we see that it actually fully trade that fair value gap. Perfectly it closed that fair value gap, then it expand higher toward the buy side liquidity. We don't have any buy side liquidity. You know what is that? Okay, minus 1.5 standard deviation. So it can happen. And if you ask me when you are going to think that market is going to fall toward that fair value gap, it has to break this fair value gap because this fair value gap should be unfilled according to the rules. Market has taken the liquidity market structure shift. This is the fair value gap. Market came to this fair value gap, went higher. This last down close candle is the order block. But market came back again to that order block. After that, it went higher, left that area open. Now it is going higher toward maybe some level. At the same time, if market can break that daily fair value gap, and if I see a body close below that daily fair value gap with a strongness, okay, I want to see some, not kind of this type of candle, not this type of candle. I want to see this huge candle when it will go through that daily fair value gap. If it happens, then I will start to think market will come toward that last fair value gap from the daily chart. At the same time, this is the weekly order block at the same time. Okay, now if it start to go high, there is much more possibility that dollar index will fall. Okay, if it started to fall, then this low, remember that low is the shallow run. This can be triggered. Okay, this shallow run can be triggered. Now this is all the correlated. At the same time, it can go higher. At the same time, Nasdaq can go higher. There is nothing wrong with that as well. So this is from the daily chart, and I will go to hourly chart from here. So this is the hourly chart, and that was the hourly fair value gap, the last fair value gap from the hourly chart. Okay, so this was the last fair value gap. As I explained that if this fair value gap is the daily fair value gap is holding the price, I would love to see market will break that last fair value gap. If market can break that last fair value gap, then start to think market is going to make all-time high. Now what happened over here? The last fair value gap from hourly chart, what happened? Market came here, this fair value gap, hold the price, send back, come back again to this last fair value gap, hold the price, send back, one more time, send back, again come here to that last fair value gap, hold the price, send back. Okay, it went lower. This is the first time it has broken the fair value gap, and this is not fake breakout because you can say one, two, three, four, five, so many candles closed above that hourly fair value gap. What is this hourly fair value gap? This is the last fair value gap from hourly chart. When this hourly fair value gap is broken, when it is broken, it's going to make another all-time high. Look, did it ever go below that hourly fair value gap, or the last fair value gap again after breaking? Okay, after breaking, not this time up. When it is broken, look, just came back again to this hourly fair value gap, boom. So please be careful about the last fair value gap from the hourly chart. It is very, very, very important. It's really so much important. And as I explained, I mean, right now market is over here, lot of fair value gap. If I ever see this type of fair value gap, I just go to higher time frame because I have lot of fair value gap from hourly chart. One, two, three, four, five. I have five fair value gap around that area. I don't want to be confused, so I go higher time frame. I try to mark one fair value gap, so it can make a fair value gap around that area from 4 hour chart. It can trade that fair value gap little bit, then it can expand higher. From hourly chart, it is confusing because we have so many fair value gap around that area. If I go to 15-minute chart, it is more confusing because look at this price action. Very, I mean, what to say? I don't know what to say. But yeah, it was just a big run. I was really surprised when I saw this big run. What happened last Friday, and I wasn't here. I just missed everything. Okay, I just missed everything. But yeah, everything was cool. The price action was perfect. Yeah, it was cool. Okay, so I don't know what to say. But yeah, I'm thinking that market is coming toward that buy side liquidity or minus 1.5 standard deviation. That is my expectation. If market can break that daily fair value gap from daily chart, this fair value gap, okay, if it can break that daily fair value gap, then I will start to think market is coming to that last daily fair value gap from daily chart. Until that, I'm not expecting market will go lower. It is going to make another all-time high. Right now, this is my all-time high here, but market is going to make another all-time high. Maybe it will reach until that minus 1.5 standard deviation. So that's all for today. I know it's gonna be a very small streaming. I just try to explain things. As I explained, man, after 1 week, I'm not feeling comfortable. I'm not feeling confidence to talk about the price action. So please do your own analysis. I believe that we just share some knowledge over here. Okay, just something, not very precisely. And I'm not so much confident about this week price action as I took a small break. Okay, I really get lost when I am outside of the trade. I mean outside of the chart. I'm a chart addicted. I can't stay without observing the chart. I can't stay. Okay, but yeah, last week I had no chance to sit in front of my laptop, so I was little away from my chart. But yeah, please do your own analysis, and I believe that if you do that, you will find better analysis than me. I guess so. Okay. Okay. I am sorry guys, you have give me, I mean, you have write down some comments. I didn't see that. Brother, why not taking hourly inversion fair value gap? Dear soul, if you are talking about the hourly inversion fair value gap, where is your hourly inversion fair value gap? If you are thinking this is the inversion fair value gap, no, this is not inversion fair value. If you are talking about this one, okay, this is not inversion fair value gap. This fair value gap is the last fair value gap, and we have an I mean chance, or we have a system to trade that on, and that is actually this. If if you have a very clean buy side liquidity, then you have to think something like this. Market has to reject from the consequent cost maybe 1 2 3 4 times, then it will be a curve. You have to take a buy here, the buy side liquidity, so your entry will be over here. Stop loss will be below the lowest low. That should be your target. Okay, something like this. So this is the last fair value gap trading system. and that is not inversion fair value gap if you are talking about this hourly fair value gap. Now if there is another hourly fair value gap or not, I didn't see it, as I told that I wasn't in front of my chart. I mean, I was in front of my chart through my phone but not through my laptop, and it's really difficult to read the price action through the phone. Okay, so I hope you will understand, brother. Jen, hey guys, Jen, how are you, brother? Amga, what's up, brother, from Adam? Amga, I'm fine, man. How are you, brother? Where you have been? I was busy with my sister's marriage, brother. So last Friday she got married and she just left us. Okay, me and my mother now. We are all alone with you, all of you guys. So do you think DXY and NQ will move alike? I'm not thinking like that. I'm thinking that dollar index will spend most of its time by consolidation, by consolidating. Okay, so let me go over it there one more time. So this is the dollar index. I'm thinking that dollar index will keep consolidating like this. Just like this. See this consolidation? It will do that type of consolidation. But if it expand higher, this constant encroachment, that will be its last stage. If it went lower, this constant encroachment will be its last stage. I'm talking about the bodies. I'm not talking about the week. We can come until that break. I mean that last fair value. Just a week. It can come over here. Okay. But if you look at the bodies, I would love to see it will be consolidating around that area, because from April, I guess from last of the April, we are going to get better price action, and that price action will like how easy it is, something like that. Okay, because this whole year is different. It's totally different. I'm reading price way from, I mean, perfectly from 2022, to be honest. When I started to read the price from 2022, I saw the previous 1 to 3 years price action, except the COVID, that means 2020, except the COVID. Every year, the first month is little difficult. From February, 5th of February, price action is too clean. But this year, this price action is really so difficult to trade. It's the most difficult time I'm passing in my life. I mean, I'm not a long time trader, but yeah, so far this is the toughest moment I'm just passing, because this is not a pure price action. I don't know you guys really understand my topics or not, but if you can feel it, I mean, look at the price action over here. Just look at the price action. See, there is some movement. This is not, just compare, there is some consolidation. Look over here, this is some consolidation over here. Just compare the price action there and there. Over here, little up consolidation, little up consolidation, little up consolidation. It is still consolidating. So this is really so difficult to trade for me. Okay, there's some other YouTubers or mentor or trader, they're really best, they're the best. So for them maybe it's cool, but for me it's the toughest time, toughest moment for me to trade, because dollar index is just consolidating. The world is not cool. Everywhere is, you know, no pitch anywhere, and for that I don't know what to say. It's really difficult to trade for me. Look at the wick over here. How big wick over there. See the wicks over here. Just this price action is really so difficult for me. If you go to monthly chart, this is the monthly consolidation. A long time market is consolidating. It started to consolidate from that specific candle. That means January 2023. So January 2023, this is the first month, sorry, the last month where we get the last expansion month. After that, just look at the price action until here, until July, it was consolidating. Then in July, it went lower. It has cleared all of the liquidity. Then we get a small run. It has taken the buy side liquidity. So sell side liquidity has taken. Whoever was thinking this is support zone, they are stopped out. Whoever was thinking this is resistance zone, they are stopped out. Both of them are stopped out now. This is the place where the smart money should start their move. This is the place because all the supporter they are done, all the resistance zoner they are done as well. So this is the place where the smart money should start its move. But for that, I guess it will take 1 more month, and from April we will get better price action. But yeah, obviously it can start expansion from March from now, I guess. Okay, you answered my question. Okay, Rain, thank you. Thanks for that comment. That helps me a lot. Okay, Rain, I really don't remember what I have just given you or what I have told, but if it helps you, then I'm cool, man. I'm cool. Thanks. If you guys get anything from me, I feel good. That's all, okay? But to be honest, brother, please don't take my analysis seriously this week at least, because I'm also not confident with my analysis. Okay, and it will take maybe 2 to 3 days in front of my laptop. Then I'll be okay with the price action again. So Monday I will take one or two loss. Okay, and this week, guys, I'm gonna take entries the way I actually trade. Okay, so no more over trading. I have already shown you how to do the over trading and what is the result. Okay, now don't look at my result because I was lucky. To be honest, I was lucky. That's why I was in green. But most of the time, nobody's lucky like that. So over trading always kills. I was lucky. That's why I was green. Maybe one day I was red, but most of the days I was green. But to be honest, you will never be green if you are not extremely lucky. Okay, so this week I will do the way I trade. I will take one entry, I will hold it. If it, stopped me out, or if I take a loss, I will try to mitigate my loss with that session. If it can, I can do that. I'm happy with that. If I can't do it, I'll just close my chart. This is how I actually trade. So this week is going to be very boring because you are not going to see so many entries. You will see that most of the time I'm just marking, okay? I'm just marking something like this, something like that. But I'm not going to push my button. And I'm sorry, and don't think that I'm afraid to to trade because my real money. I have already proved that no, I'm not afraid of with my money. I can do everything for your learning. I can do everything, okay? I don't care about anything else. I can blow my account as well. If you ask me, I will. Even if you just tell me, I will pull a boat and then I will blow my account in front of every single person in my life. I can do that as well. But my intention is, please try to learn, like try to understand what you should do. That's the my point, okay? For that huge extreme over trading. If you do that, you will be mad. Okay, you will be mad, and you will see that most of the time you are going to blow your account if you don't have very strong psychology. So I hope that you will understand me. I don't know. That this is the tough trading. Oh, okay, yeah, this is the tough trading, man. To be honest, this is the tough trading. Hello, brother. Listening to you while driving. Hi, Ryan. Don't do that, brother. Please don't do that. Okay, while you are driving, please don't do that. And I'm not going to make it much more longer. I told that it's gonna be 1 hour. I'm already 4 minutes past of 1 hour. Okay, so it's gonna be very little streaming. You can rewatch. Okay, please don't. I'm gonna close it. Okay. Thank you guys for joining. And if anybody has any question, you can ask me. Otherwise, I'm gonna close my session for today. If anybody is new, you can subscribe to my channel because I'm very near to 4,000 subscriber, I guess. So I'm very near to 4,000 subscribers. So you can actually you can subscribe to my channel. You can give me a like if you want. Yeah. So 3983. I need 17 more people for 4,000. Then it's a mile follow something like that. Yes, show us discipline. That will help us a lot. Yeah, Ahmed Mustafa, I will do that from this week because I have already lost so many money by over trading. I hate it. I really hate it, the over trading, but I had to do it. I have done it, so it's done. Thank you, Martin. No problem, Martin. I hope I will see you from now, Martin. It's been a long, you take a big break. But yeah, welcome back, brother. So guys, if anybody is new, you can subscribe to my channel and make it 4,000. I mean 4000. So 30. You can make it for me. Otherwise, just let it go. Thanks for I mean for joining, guys. See you tomorrow.